The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager. NFT crypto girls. Just want to say Lawrence would for sure appreciate that. All right, so checking in on Bitcoin, the CoinDesk Bitcoin price XVX index currently trading at 39,287. Bitcoin is down about 5.2% over the past 24 hours, and the CoinDesk Ether price ETX index is at 2584. ETH is slightly down about a tenth of a percent, and the new DFX CoinDesk's DeFi index is trading at 542. DeFi is down just over 3% over the day. All right, and joining us now to discuss the crypto markets is Jeff Dorman, Chief Investment Officer at Arca, an asset management firm. Welcome to the show, Jeff. So over the weekend, we saw Bitcoin breach $42,000. What do you make of the bounce and where it's headed now?
Sure. I mean, there's been a lot of positive developments over the last few weeks, and you know, the market got very offsides, thinking that from technical analysis and other reasons that Bitcoin was going to crash. And when you have a combination of a lot of shorts in the market, expecting a certain direction, combined with positive news like the fact that there's been massive fundraising rounds in the private markets, everything from FTX getting an $18 billion valuation to OpenSea getting a $1.5 billion valuation, as well as a string of announcements from Wall Street, from Bank of America, Goldman Sachs, GoldenTree, as well as Main Street with Robinhood and Shopify. There's just too much positive news and too many negative, or rather shorts out there that are offsides of the market, that when you start to get a little bit of momentum to the upside, it starts to break and you start to get real liquidations on the short side. And that's what we saw all of last week.
So crypto Twitter, just sort of the crypto world is all aflutter about these bills in Congress, like the infrastructure bill and also the Don Beyer bill that's a comprehensive bill about crypto. Is the market really paying attention to these developments, or is it kind of on the side?
I mean, the market's definitely paying attention to it, but I mean, what are we going to pay attention to? I mean, this has been a regulatory overhang or cloud over the market for 3+ years. Just like it was ridiculous that the market would trade up every time Elon Musk said something, even though he said the same thing over and over again 12 times in 2021. The same is true on these legislation bills. Like, we know regulation is coming, we know legislation is coming. How many times is the market supposed to react to the same news, which is something is coming, we just don't know what? As I like to say it, bring it, don't sing it. We don't know what this final bill is going to look like yet. It is going to take a long time to pass through Congress, as everything is that goes through Congress. Ironically, a lot of us left traditional Wall Street because we were tired of only trading when the Fed or Congress said something. And here we are again in digital assets being held by uncertainty. Mm-hmm. So yeah, we're definitely looking at it, but there's nothing to make out of it yet that should drive price action other than fear and guessing.
Jeff, Arca also has some news recently announced. You're launching the first actively managed income fund in the digital asset space. Tell us a bit about that.
Yeah, so a lot of you're starting to see a lot more press talking about the yield that's available in digital assets. When we started Arca almost 4 years ago, we always had a vision of having multiple products to serve different risk rewards and to serve different investors. Well, the investors who like venture style returns have been in the crypto markets for years now, right? Looking for these high upside opportunities. What we haven't seen yet is the fixed income investors, or those who are looking more for 5 to 15% yields that are just not available anywhere else in the market right now because of cash being worthless and fixed income. Investment grade bonds trading well under 3% and high yield bonds trading well under 5%. There's just nowhere to get yield right now. So what we wanted to do was take advantage of these yields that are available through a variety of different channels and digital assets and offer it in a product available for accredited investors and high net worth investors, where they can access the digital asset market, but in a completely different way, in order to earn passive income rather than looking for the higher volatility, higher returns. And because we've been in the market for so long and we have operational infrastructure, the compliance, the regulatory focus, and everything that goes with investing in this space, it was a natural next product to offer to different types of investors who have yet to get involved in this market.
Jeff, I wanted to get back to something to what we were talking about earlier. We've seen some Bitcoin leave exchanges over the past few days. Where's it going? What do you think is happening there? And is it actually a big concern for the market?
That it's leaving exchanges?
Yeah.
I mean, I don't know why that would be a concern. I think all the data is telling you is that most investors don't want to keep anything on an exchange if they don't plan on doing anything with it for the foreseeable future. So all that means is that people who are owning Bitcoin are taking it off exchanges and putting it in cold storage or custody or other places where they just plan on sitting on it and doing nothing. We've talked at length for years how Bitcoin is a really boring asset that people love to talk about. There's nothing to it. The change, the story hasn't changed. You either believe that this is going to be a future medium of exchange or a store of value, or you don't. And everything along the way just indicates the probability of success or failure as we either head to $500,000 per coin or we head to zero per coin. So a lot of the focus on the data on Bitcoin is just shuffling deck chairs to one of those ultimate goals. I think, to see it leaving exchanges is simply indicative of more longer term investors putting it away, in their drawers and doing nothing with it. I think some of the data.
Is that the only possible? Is that the only possible reason they would do that? In other words, are they leaving exchanges for other uses?
There's not a lot of other uses
for other reasons.
What other uses are there? I mean, there hasn't been a lot of other uses for Bitcoin in a decade. If you were talking about Ethereum leaving exchanges, yeah, that would indicate that it's probably being used for NFTs, or it's probably using to generate yield within decentralized financial applications. When Bitcoin leaves, it's just, you're putting it in a sock drawer and you'll come back and look at it again in 2 years.